Hey traders, this is Jeff from ZenTrader.ca with a market update for this weekend, and let's get right into a 60-minute chart of the Nasdaq. The action on Friday, it initially looked like it was going to be a fairly decent follow through to the downside after last week's move, but it really didn't materialize. But at the same time, I don't really view the action as bullish either, because if you take a look at the RSI action, you can see here we topped out around 60. This is very typical to kind of have an initial move down, form a lower high, and then just move down. You know, part of this was maybe some people buying, part of it was maybe some people not wanting to hold shorts over the weekend. I chose to go ahead and just hold the shorts that I have in the market indexes and EWC, as I'm bearish on Toronto still. I still believe that we will, at the minimum, retest these lows around 2600, and then at that time it'll be one of those things whether we're going to bounce there and move higher, but I'm still bearish, and I really see no reason to be buying stocks long right now. There's a lot of bearish patterns right here. You've got this gigantic wedge here forming, which a breakthrough 2650 could easily send this down fairly fast. On the Dow 60-minute chart, you've got a head and shoulders forming with a neckline around 11640. Again, bearish action oscillating between 20 and 60 here on the Dow 60-minute chart. The transports, I was taking a look at this. I added a Fibonacci. You can see here from the top to the bottom, this retracement here has come all the way back to the 61.8 and was essentially rejected off of that. It's basically in a holding pattern as to, you know, if the general markets fall, this is going to fall. If not, this is going to bust up through here. If you take a look at this trend, this downward trend line on the RSI, you can see a very, if you want to play this to the upside, a break through this downsloping trend line could be the opportunity that you're looking for, give you a little bit of stability in that trade. If you want to like wait for it to bust up through and then buy the pullback, that would be even safer. That way you wouldn't get caught in a little bit of a fake out. The euro, this has been an interesting chart to watch because it's been fairly technically predictable. You know, you had this channel here, you had a wedge here, it broke down through, back tested this bottom trend line. I mean, perfect. And now we're forming a bearish wedge here, which I don't see any reason why this isn't gonna just, you know, over the next couple, you know, 3 to 6 months, just drift all the way back down to here. You know, whether it happens or not, obviously it's got to first break this bearish wedge formation here. So this is something to watch. I was trying to do a little correlation on this with the S&P down here, and it doesn't really give any conclusive. Like, basically the euro fell here at the end of 08, so did the S&P, it rebounded. But then when the euro fell from mid 09 or late 09 down to the midway part to 2010, the SPX just kind of went sideways, and then they both rallied in tandem, and now they're both pulling back. So I can't really say that if the euro falls, then the S&P is going to fall, because the correlation doesn't seem to be 100% accurate. TLT, a while back here, I would say right around here, I felt that the TLT bonds would retest this, and it did exactly. Bounced off that. I think we're heading back to the highs, and then maybe we'll form a double top there. I mean, bonds have been an enigma. I remember back here people were saying this was a top and that bonds were going to just go down forever, and it just basically had this long period of consolidation, bust a new high. So this is something to watch. I would be, if you're holding, I would be selling some back at the previous highs.